guys, taxes are almost due, and every year everyone is trying to find the most deductions so they can get the most money back or save the most money on their taxes. So this year I thought I would share a bunch of different things you cannot deduct that a lot of people think that you can, and none of us want to get audited by the IRS. So I wanted to share the most common things people think they can write off but they can't. That way you guys will be good with your taxes. So let's get started. Alright guys, before we get started, if you're new to my channel, please subscribe by clicking the subscribe button and then clicking the little bell icon. That way you guys won't miss any more upcoming videos from me that help you save money. On Tuesdays and Thursdays, you'll get a little update from YouTube when those videos go live. And as we head into this video, I need to give you guys a disclaimer. I am not a CPA. I do not do taxes for people. All of the things I'm sharing with you guys today are compiled from a bunch of different tax service websites and CPAs themselves, from places like TurboTax and things like that. I just wanted to compile them and put them all in one place so you guys knew exactly where they were. Since everyone is totally different when it comes to taxes, I highly recommend that you talk with your own CPA, tax accountant, your tax guy, whatever, and talk about these things that I've mentioned in the video and see if they apply to you or not, because everyone is totally different. My intention with this video is to help you guys out, to give you guys some ideas, to get your brain turning, so you guys can be ready when you are ready to file your taxes and hopefully not make any mistakes. But again, reach out to a tax professional if you have more questions or want to know specifics for your situation. Okay, number one thing you cannot write off is credit card interest. A lot of people think that you can, you cannot. However, if you have a business credit card or you have business expenses, you can write off any interest that you incurred on those business charges. You'll notice a lot of these tips are two-sided. You cannot do this, but here's a little loophole where you could use this. And again, that's why you're gonna wanna talk to a tax professional if you have questions on any of the things I'm sharing today. Number two thing that you cannot deduct is a gym membership. I mentioned this before in another video, but you cannot deduct any of your gym membership or weight loss things unless it's prescribed by a doctor. If it's prescribed by a doctor or a physician, then you are totally able to write off those gym membership fees or other things to help you get into a healthy weight. Number three thing that you cannot deduct is commuting costs to work. If you live an hour away from work, you cannot deduct that hour-long drive there and back every day. You cannot deduct that. However, you might be able to deduct any travel expenses outside of you traveling to and from work. That includes visits to clients, out of office business meetings, and if you're self-employed, that would go on a Schedule C. But if you're an actual employee, you might find that your business will reimburse you. If they reimburse you, you're not gonna be able to deduct it again on your taxes. Number four thing you cannot deduct. Even though there are pet insurance policies now, you cannot claim your pet as a dependent. And before you guys start laughing, people do this. They assume that they can since they're paying insurance for them and things like that. You cannot claim your pet as a dependent. Sorry, that only applies to humans. However, there is a loophole. If you have a service dog or a guide dog, you can deduct itemized medical expenses and any costs associated with buying or training a dog to assist with those in need. Number five, this is one a lot of people try to deduct or think they can deduct and then they find out they can't and they're pretty sad. It's plastic surgery. You cannot deduct plastic surgery unless, again, it is medically prescribed. If you're not sure if your surgery would be considered a medically prescribed surgery, you can ask your physician to see if it is. That way you would know beforehand whether your surgery could be written off or not. Number six thing you cannot deduct on your taxes are home improvements. So you guys cannot deduct things that happen to your house or things you upgrade in your house. The loophole on this one is actually pretty tricky. So again, talk with a tax professional about this. But if you have a home office, you can deduct those expenses, and things that you might need to upgrade that would affect the whole house, like a furnace, you can deduct a percentage of that for your home office. Another random loophole for this would be energy efficient upgrades for your house. It's not technically a deduction. I don't even know exactly what they call it. You again have to talk to the tax professional. But if you're upgrading windows or if you're upgrading like things in your house to use less energy, you usually get some sort of tax rebate or credit. So that would be another random loophole where you might be able to save some more money on your taxes. Something you cannot deduct that I'm sure a lot of people probably don't even realize is you cannot deduct political contributions. Did you guys know that? So if you're donating to someone's campaign who is running for office, you might be able to help them win by your donations, but you actually can't write off a single dime of that donation. Something that you should be really careful about is charities. There are a lot of charities you can donate to and use as a tax write-off. However, there are a lot of charities that you cannot write off as well. So you need to be careful and make sure you know before you donate whether you can write off that charity donation or not. Child support payments. Now this one's kind of tricky. If you're on the receiving end of child support payments, they won't count as taxable income. And if you're the one paying child support, you can't actually get a deduction from that. Alimony payments, however, are totally different and they are tax deductible as long as the couple is legally separated or divorced. Now, I know a lot of you guys weren't with me last year when I started this YouTube channel, so there's actually a really important tax video you guys are gonna wanna watch if you want more tips and tricks for filing your taxes. So I'm gonna link you guys to a video right now. It's called the 12 most crazy, wacky, and overlooked tax deductions. Some of them are pretty wild and some of them you probably can deduct and didn't even know. So again, I want you guys to save the most money you possibly can on your taxes. So check that video out after this one if you have not seen it yet. And obviously, and most important, I'm just gonna say this because I know I'm gonna have people comment on it. The ideal situation is that we don't want the IRS hanging onto our money so we get this huge chunk or huge lump refund at the end of the year, but we also don't wanna be owing any money. We wanna find like the perfect balance where we barely get any money back or we barely owe any money. So play with your deductions if you need to with your employer so that happens for you guys. I know some people who have a really hard time saving money like to get money back from the IRS, but some would argue that the IRS is actually making interest off of your money and it's better for you to have your own savings account collecting that money and earning interest on it yourself. So anyway, that's just my 2 cents because I know someone is gonna comment about that. But in any case, these tips are supposed to help you guys know what you can deduct, what you can deduct. So hopefully this video I just did and the one I'm linking you to right now will give you a ton of ideas for your taxes to hopefully help you guys either owe less or get more money back. All right, thanks guys, see ya.